Good morning. It's March 18th, and this is a podcast by Critical Point on the stock market relative to the SP 500 mini futures. In this podcast, we're going to keep it a little shorter. I'm going to talk about what's going on intraday, interweek, and perhaps into next week. So let's take a look at the hourly chart, and what we're showing is the model believes on February 13th was an L3 bottom, level 3 bottom. That is your largest swing during a month, okay, in terms of price. Therefore, it reflects the largest swing of buyer seller interest and perhaps even some fundamental supply and demand kind of data. At any rate, the market was to rally into this week for a level 3 top. And we're seeing that it started out that way on March 13th, but this week it has just fizzled out. And we're now concerned the level 3 is not working correctly. Okay, so this could be a sign of a very weak market still. Nevertheless, we can't rule out a sudden spike or surge here, even 2,000 or 3,000 points on the Dow, 200 or 300 on the SP 500, and it could occur just this week. And it would just be a level 3 top, and then the market would be back down. So let's take a look at inside the level 3 trends. We have what we believe to be an L4 cyclical bottom, or that it's going to occur latest as of today, ideally first half today's day session. Okay. We're calling it as of yesterday. In fact, during the day, we made a little podcast update and said, okay, we got a little buy signal here. And lo and behold, soon after that, the government come out, or at least media come out, saying that the government was looking at perhaps policy that would spend $1 trillion or more in helping consumer and businesses. But notice the market then just fizzled out on that. And notice back here, on March 12th, we've actually got the Federal Reserve going to spend $1 trillion to help the economy, and it also just fizzled out. So this market is quite weak. People are acknowledging that if we're spending all this money, things are bad, whereas in the past, they assumed if the government and the Fed is spending money, it's a positive thing, right? The moment, someday they'll look at it as positive, not today. Okay, so inside of this L4, we can see there's a variety of L5 and L6 swings here. And what we believe is the market was supposed to have continued this rally yesterday into overnight, and you can see they just immediately sold it. It's limit down this morning, and the market's going to open up in just about 8 minutes. Our thoughts is that it really should bounce for an L6 showing here. And that would be, when it tops, that would complete a top for an L5, shown here. And then that would complete a series of these L5s, waves of buying and selling, to actually complete a level 4 intra-week. And that could trigger the larger level 3 trend. Now, again, we don't know how much upside. We do have this trend line here. We have a SAR coming in, suggesting maybe resistance is around 2,500 for this contract. We have another trend line coming here suggesting support might be around 2340s. And by the way, we think instead of thinking this is a downtrend line, we're thinking that really you got a floor here and then you got a downtrend. That's actually a descending bearish triangle. So our thoughts are, even though the market should still rally this week into a level 3, it can rally today into a level 4. That a violation of yesterday's low at 2,365 would be a sign it's simply not working well enough. We would be concerned the market wants to follow the larger trends lower into next week. Okay, so now we're going to zoom out, and we can see that we had the first leg down of this bear market was into an L3 bottom. As of February 28th, it rallied into an L3 top as anticipated, and then it's declined into an L3 bottom that was probably placed on March 13th, or is being placed now. But this poor performance of not even being able to pick up its head is worrisome, that it's not going to rally into this time and price objectives for an L3 top. We're concerned the L3 top actually occurred yesterday and did not work for trading purposes, and we're concerned a violation of yesterday's low, the prior 2-day of lows, is just a sign it's going lower into next week, and objectives range anywhere from just slightly lower to as low as, say, 2150 for the S&P 500. Now, the daily stochastic here is oversold. It is turning back to a sell signal, however. It is oversold, warning we can still get a bounce into this level 3. If we start seeing price above yesterday's high at 2542.75, we'll assume the L3 is trying to work. We're still going to look for a sell signal on it. We're still going to assume the larger trends are down. We're still going to assume lower values probably next week, if not the week beyond. So those are the parameters to watch. Yesterday's low and high can give us a clue here, because if you can look at it, the market's trying to trade inside days at the moment, and volatility has dropped on a daily average true range, or just true range, and that's probably not going to remain that way. In other words, the volatility is probably going to pick up, and we got some bigger moves coming again. The market was just resting, and it's probably resting because it's near the 2018 low, plus a long-term trend line that we will show in the next video here this morning for the bigger trends. At any rate, on a short-term basis, we think it's lower next week and farther out, or at least going to see choppy trading range. We're concerned we're not going to get the bounce this week, yet it's still on the table. It violates yesterday's low. We're going to be very concerned it's not working, and it closed below that low. We're going to say, yes, the high was as of yesterday. It didn't work for trading purposes, but the model will still use it for timing purposes, and we'll just move forward from there. Still looks like a bear market to us. As always, manage your risk relative to the analysis of others. Thank you.